It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon. And great to be able to follow Steve Rose. Really good 2 hours of information, great deal of technical information. That's just what we do here at TFNN. We give as much as we can. And it's like Tiger University every day. And, of course, today is it's Tuesday. And Tuesday I'm followed by, the Options Hour, Victor Jones. That Options Hour is just really, what a treat. Great Information. Programs all through the day. You've got Daryl Martin, Dave White. You've got Tom O'Brien comes in 4 o'clock till 6 to wrap it up. So we are busy. Hey, talking about being busy. Oh, today we've got Paul Gigante, who's going to host today's Options Hour. Oh, that should be great. So I just wanted to show you something. I rarely get to travel to places in the United States just kind of for fun. Either I'm doing something on business or it's just around this area. Or I have to go overseas, visit family. I don't have to. I want to. I go overseas to visit family. It's kind of far away. But my wife decided she was going to go to a convention down in San Francisco. And I said, you know what? I can do my work from anywhere. I'm coming with. So we decided that we would do that, and that would be this coming week. At the same time, I said, we have so many loyal listeners out in the San Francisco area. And I have subscribers from the San Francisco area. I know that I should be taking a break, and I will be doing my show pretty much every day, as much as I can. I'll be doing the show. Got good friends in San Francisco I promised I'd spend some time with. But I'm going to do my absolute best to try to get some kind of venue where I could have a meetup, maybe give a little presentation or something. Well, let me tell you, there are a couple of conventions going on. There is not much space available at all. But I was able, very fortunate, met some over the through the business dealings. I was able to secure a spot at the hotel or the Marriott Marquis. So if you go to the front page of TFN, for those of you in the San Francisco area, now, of course, you don't have to be in the San Francisco area, but it's going to be in San Francisco at the Marriott Marquis. And all the information is right here, front page. 2 hours I'm going to do this coming Wednesday night a week. That's the 10th of April. I had to get that space. Now, it's limited space. And as a result, it's absolutely necessary. I need to tell them numbers. So please do me a favor. If you're in the area, besides being this is going to be a special talk that I'm going to give. It's going to be on the tide. On basically what I'm looking at is what momentum indicators, what indicators and what ChapmanWave techniques am I looking at to decipher the grander tide, the bigger trend, and what we can do about it. And I'll take questions, and I'm really looking forward to it. So within that context, go to the front page of TFNN. You'll see it says San Fran free live workshop. You click on that button, learn more. Whoops, that's the one. Let's see, San Fran. Oh, was that the other one? Here we go. Learn more. And it says, join Basil Chapman as he teaches you the tide of the market based on the ChapmanWave methodology in this free live workshop. The event is taking place on Wednesday, April the 10th from 6 o'clock till 8 p.m., San Francisco, at, as I say, the Marriott Marquis, fabulous venue. And keep in mind, the event is free, but space is limited, so you must register now to reserve seats. I thought, if people take the effort to come there, I will do something special. One lucky attendee will receive a free copy of my CD book introducing the ChapmanWave methodology. That's a $249 value. You get paid to come, but you must be present to win. So that's the essential is that you're going to be. So it's like a workshop time, a meetup. I want to meet you. I want to be presenting all the time. So it's at 6, probably about 6:30 or so. I'll get going with something. I know many of you won't be able to get this straight after work, but I'll hang around. And they've been kind enough to, to work out that space. 55 4th Street, San Francisco. So am I looking forward to it? You bet I'm looking forward. Now let's go on with the business of the market. The Dow, as you can see in this particular chart right here, is extending. Remember let me go to my usual chart that I show my subscribers. And boy, did I give a lot of discussion about this very breakout, about that doji candle yesterday. You want to learn about candles, which ones are specific, which ones are really important. Every day in my opening call, I discuss the different techniques. And when these particular candles show up, they are, well, this is called the golden egg. That's the body. This is the leg of the stalk leg formation. This is the body. I typed in the neck. Now I've made it a different color so that you can see it's a little bit clearer. That neck is running to where the up channel supports. So that oval pattern that I call the golden egg is the body of that stalk leg. And we went sideways and we've broken out. We're on the we're looking at a chart that is, so just in the simplest of forms, a couple of trend lines, a 9-period moving average, got the MACD finally crossing positive again. The stochastic was good. You remember I kept saying, I'm going to stay with that stochastic, even though that MACD is telling me to be a little bit careful. So we were fortunate yesterday. We actually got stopped out for a very small percentage in our DXD, our short of the Dow. It's so interesting. My thinking before was I wanted at least half of the DDM to stay in place. I didn't anticipate that the market would drop as it did on the, what day was it? It was right there. On the 27th, was it the day before? Whatever it was, when that day underneath the 9-period moving average was that we would actually get the short position. Well, we did get the short position, but that is the rule in this methodology, as many of my subscribers know. When we get to this particular area here, D or E, in the ChapmanWave methodology, I have no choice but to start being a bit cautious. So now we've broken out. This is the neck formation, and the trend line that we're looking at is the dashed line, which says right into the 14,690 to 14,720s, 14,690 to the 14,720s. That's where that line is going to become resistance. And then it actually breaks out. I don't think it's going to do that in this move, but thinking and actually doing are two separate things. So if the Dow breaks into the 14,800s, it's powered above the resistance line. So now let me go back to the, so here's another thing we need to look at now. I've got calls waiting, and I want to also go to talk about some of the, where we are in the market right at this moment. But first, let me show you. The 120-minute chart is broken into leg E on the upside. Hey, it could be A, but I'm calling it E to be cautious. And the VIX has gone back under 13. It's at 12.83. For months and months and months, I've been saying that volatility index tells you about the buying pressure. To me, that is key. When it gets above the 14s, we'll start selling in the market. And if it gets back to the 16 area, this market will come down. Until then, this is what we're looking at. We're looking at buying pressure. And enough with that. Let's go straight to the market. The market says the Dow is up 101 points at 14,673. The S&P is up 11 at 1573. The composite index is up 25 at 3264. Gold is down $17. Man, I tell you, how many? We've been talking about this for weeks. That gold is just, there's no need for it right now. Especially with the Cyprus crisis, it just ignored it. Money would have flowed into gold. You remember that H pattern that turns into an M that I drew weeks and weeks ago? There it is, it's still there, and there's that H pattern turning into an M. So the GLD looks to me like it wants to test at some point. It's going to test the 151 to 150.84 area. If and when it breaks 148s, gold will drop very sharply, but it could still keep bouncing around. Right now, I think it's going somewhat lower. And silver is down 44 cents at 27.50. Platinum is down 18 at 1.575. You've got copper down at 3.36. Crude oil is down at 73 cents, and bonds are down 13 ticks. This is really an unusual market. My Dow Quartet are not acting all that well, but you've got United Health, you've got some other stocks that are picking up the slack, especially in the Dow, that are just managing to push this market, rotating through it. Let's go to Dan in Miami. Hi, Dan. How are you?
Hi, Basil. How you doing?
Very well, thank you.
I'm watching the NASDAQ 100 and NDX. It looks like it's breaking out. It's made a new high today. What do you make of that? Is there a trade in like the QLD?
Okay, the QLD. Okay, hold on a second.
So given Apple, I'm watching Apple too.
Exactly right. Very good point. So let's just look at this together. I have the NDX 100, but I'm going to go to the Qs, which are that folks. The Qs, the QQQ Trust Series. That is the trading vehicle if you want to go long the NDX 100. If you want to go short, then there are other vehicles, or you can actually short the QQQ, but you can short many of these indexes by going long the index that's made up of short position. So it's really important, because now what we've got for traders, for the layperson, we've had it for a while, but I'm saying what we have is a different vehicle to any other time in history. You are not able, as a layperson, it was really difficult to actually short and feel comfortable. It was impossible to short by going long, which is what many IRA and these different pension plans that you have, or funds that you particularly trade for your own account. So that's very important. So yeah, we are looking at the QQQ at 69.19. I've got it in leg D, but actually I did this very quickly, and what I'm going to do is to show something else. I wanted to match the others. There's a technique that I use where I go peak. Now, let me just do this. We've got so many new people in the den and all over the show. I'm going to do this just to show my technique. Well, wow, this is going to be a little messy. Can I do it without being messy? Let me explain this first, and then I'll try to clean it up in the break. There was a high of 69.02, and that was done on March the 8th. Then it pulls back, and it goes to 69.01, 2 pennies lower than what would have made officially a leg D. But the MACD and stochastic were very poor, and the on-balance volume reversed. So a technique that I've developed over a while now, quite a while, is to consider that peak C1 and C2, where peak C2 did not give me that requisite leg D. In the ChapmanWave, you look for the lowest low bar, and you want to go at least 4 peaks higher. Well, what I'm looking at now is that there was, in fact, a sell signal at that peak C2 at 69.01, and everything fits in place. And that we've got is a brand new buy signal, and the buy signal says we are in leg A, B, C. We are either in leg D if the old peak C1, C2 has gone to that requisite leg D, but more importantly, I think I wanted to match everything else, and I'm going to call this leg C, and I'll explain exactly what I'm looking at. That says that the QQQ should go a little bit higher, and I'll be back with Dan, and we're going to talk about a potential trade straight after this.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. Dow's up 107, S&P's up 11.5, and we're on right now with Dan in Miami. We're looking at the NDX 100. Now, what I did is during the break, Dan, is I cleaned up a particular chart. I made another chart. I've cleaned it up. I've actually got to get rid of this chart. I don't want it here at all. I've just done it for this particular purpose. And what I wanted to show is that there's a decisive up channel that has been holding beautifully, number one. Number two, one of the techniques that I've used for many years, and I just love it, is this 9-period exponential moving average. That's the black line that you can see. Let me just move my chart so that... Are you looking at Tiger TV at all?
Yeah.
Okay, so you can see that black line there has held the price or it's become resistance. Now, what's very important about it is it's continued to hold the price, so that's important. I like to do this. It's a technique that I do. I'm going to use a very simple way of looking at it right now, is within the channel, I like to find, there's another technique that I use that's called the inside track in my CD, Introducing the ChapmanWave Methodology. That's what I talk about. But that's, at this particular point, I don't need that at all. What I really want to find out, where is the body of trading going on right now? Now, if I wish I had my black chart right now, because let me make that different color. I'm going to make it, I'm running out of colors here. I'll make it that color there. And then above it, I'm going to have another track. And this is going to be very important. Why? Because this shows the body. I don't look for any symmetry between these lines other than they're parallel lines. This says that there's a particular target on the upside. And in this case, I'm going to make it green. because if it breaks above it, it goes towards the upper band. And that says that this peak C right now that I'm looking at, this leg C, I've called it leg C. I just want to make it as simple as possible. If it breaks above, it's already done that. So it's at 69.23. If the Qs go to 69, anywhere between 69.49 and 69.66, then there's a really good chance it's going to try to tackle this uptrend line at about 70.16. So that's number one. Now, that's for the Qs, that's a nice percentage gain, but I would treat that more as a potential short-term trade. So now let's go to something even more important. In the 120-minute chart, we've got peak A, peak B, peak C. We're in leg D, and the technicals are only just turning up. So you got to be careful because there's trend line resistance, and that trend line resistance is at about 69.43. So all of a sudden, all the numbers are starting to come together. And so here's my thinking. Because I want to look at the positives, and the positives in the daily say that it's held above the 9-period moving average. If the best case right now is that this is new leg C, I'm calling this A, calling that B, and this is leg C. Let's call it best case. And it's nicely above the 68.72 9-period exponential moving average. MACD's at 82%. That's good. The stochastic's at 82%. The MACD hasn't yet crossed positive. If it was to do that, that would give added incentive to buying in the daily chart. But look at the weekly chart. I'm going to expand this, and you'll see how important some of these trend lines are, both the trend lines and the moving averages. I've expanded this chart, and you'll see that the last peak was from the low bar of 60.04 the week of the 8th of June in 2012. It went peak A. In the ChapmanWave methodology, what you look for is a buy signal that goes to a buy mode, and that should take you to at least peak A, B, C, and a fourth higher peak of peak D. It can go higher, and in this case, it went to D. Where was the D? It was right at the left side lip of 68.55 back on the week of the 6th of April in a cup formation. In the ChapmanWave, when you break out in a cup and ladle formation, that's my own technique, that takes you to at least a D, but it can take you to an E, and that's exactly what it did with a doji candle at 70.58. That was on the week of the 21st of September. It pulls back sharply, and it goes to 61.31, and now it's walking the 9-period moving average in the weekly chart, just a stair-step, steady move. There's nothing spectacular about it. It's very quiet. Part of that is because Apple drags it down, but Apple is also dragging it up, and today Apple's up 7.54 at 436. So this is what I'm going to recommend. The weekly chart is still very strong, and it's I'm calling it leg C right now. Now the monthly, and this is part of what I'll be talking about in San Francisco. I'm going to be talking about the types of techniques that allow you to keep, to hold, to see that a trend is holding in place. And in this case, in order for the Qs to get to leg D in the monthly chart above 70.58, it's taken a lot of time, and part of that has been hampered by Apple. So now I'm going to get to your question, and we've got a break coming up, but I think a lot of people, this is a question actually a few people asked me over the weekend, so it's good that I can get to it now. I'm going to talk about the potential for a trade, but it will be a short-term trade. We'll be back straight after this break with Dan in Miami and Basil Chapman. Your dial's up 97.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman, and we're on right now with Dan Miami. And Dan wants to know, is there a trade in the QQQ? Now, that's the NDX 100. So, Dan, do you have a time frame? Because I have two ways of looking at this. If you are looking at this as a short-term trade, then I would suggest 2 things. One is, I'm not sure if we are close to some kind of a short-term top here at this particular point, because having recycled like this, I suspect we've got a little bit of whippiness on the upside. And I'm not sure if this is going to be like 5 of the Elliott wave that we're looking at. I'm just not sure yet. But what I would say to you, so would this be a short-term trade?
I tend to trade longer than that.
Yeah, that's
mainly.
Right. Well, from the tone of your voice, my guess was you were looking at this as a kind of a position to see where it would go to. You see, exactly, the weekly chart. The weekly chart it's just beautiful. 94% in the stochastic. MACD's good. So this is what I'm going to suggest to you. Why don't you take a very small position here in the Qs at 69.22, realizing that we could pull back to 68.96-ish or 69.80. And then have leg D to the upside, which should take you to 69, maybe the 46 area that I've been looking at. And that's
possibly when add off the 120-minute maybe.
Yeah, but the 120-minute is actually saying that 68.85 should be some kind of support here on the short term. But the reason why I'm saying just a small position is because the weekly chart is really the benchmark here, and it's holding the 9 EMA, it's holding the MACD, the stochastic, on-balance volume is increasing, the relative strength is acting well. So I would look at it as a starter position, and if it actually gets carried away and it goes to 69.75 or 70, that's great. You're in the trade. Not a big trade, but you're in the trade based on the weekly chart.
Bottoming out, the stochastic on daily Apple seem to be.
And Apple, you see, you mentioned Apple. And Apple right now, it's made the technicals in the weekly actually are starting to improve very slowly. But I have to see the MACD cross positively and the stochastic get to about 23 or 25%. So that's telling me that there's a chance that Apple on the short term is oversold. There's a bounce from 435 maybe to the 444 area. Could even go to 448, maybe 453. If that's the case, then your Qs are going to do well. And that's the reason why I'm saying start a little position here, but you know that you're on the daily, you're kind of at risk of within 3 days, you could be pulling back quite sharply. But if the weekly chart is building strength, as it seems to be doing, if the Qs actually break out and if Apple helps to break out, you're in the position. And I would just say, you know what, you do this and you've got yourself a fairly tight stop, a stop at 69.23. If you had a 1 point stop, I think that's pretty reasonable, don't you?
Yeah, exactly.
Yeah, so I say nibble on it now, realizing in a short term there's a possibility of another pullback before, if there's going to be leg D, it comes across, goes to a higher high. But then I would use the weekly. So if by Friday at 4 o'clock, if the weekly is above 60, 68.80, preferably it's above 69.70, that's going to be excellent action. So that's my recommendation. Hope that helps you.
Great. Thanks a lot.
Thank you very much. So Dan in Miami, going to go all the way across to Mark in Denver. Hi, Mark. How are you? I think Mark is listening in.
Sorry. Hello?
There you are. Okay. Hi, Mark. How you doing?
I'm doing great. I had you on mute for a second. Sorry.
Okay. Oh, excuse me. You'd like to look at?
Yeah, it looked to me like the market just wasn't ready to break down yesterday, so I jumped back into some UTX and some...
In the calls or the call position?
UTX and DD calls for the April 20s. I got the 95 UTXs and the 50 DDs. I was wondering what your thoughts are on those.
Okay. So then so right now you're in the money.
Yep.
So I'm going to recommend, because you're in the money, that on no condition should you take a loss on half of the position that you have.
Right.
The other one, I would even say that if United Technologies, which is one of my Dow Quartet stocks, is actually my pilot light stock, and it's saying, you know what, I'm acting okay here. Let me just get rid of this for 1 second. I've got that circle, but this is even more important. What I've got here is the potential for that falling X formation, that increasing cone formation. Now, it's actually okay. It acted quite poorly early on. And believe me, this and Triple M were my option plays for today, but I didn't want to see that big gap to the open, so I said, okay, I can't do it. But I'm thinking the same as you, that they acted quite well recently, holding pretty nicely. Not great, but they acted well. And the weekly chart is still acting very, very strongly. So I think you're in the right position. But because you've got the option, on the one hand, I'm saying, wow, you can't tell me that over the next 2.5 weeks that UTX won't try for 94. Well, I've seen this happen before. Years ago, I used to do a lot of option trading, and I would put that on, and I'd sit there, and I'd wait, and all I had to do was get 50 cents higher, and the darn stock never did it. Yeah. So all I'm saying to you is you understand exactly what I'm talking about. It's a little different. It's a different animal to the stock. You're playing the options, which is really you're playing the enthusiasm and the disappointment of premium, and that's really what you play. So I'm going to recommend this. I'm going to jump to the 120-minute. You see this 120 minutes chart? Yeah, I don't know if you can see in Tiger TV.
Okay.
I've got this thing going on for ages. Now, my rule of thumb is that a rectangle formation the longer it goes without breaking to the upside, if it's at the highs, the greater the chance is it's going to break down. Well, it did that once. It slipped suddenly to the 91.29 level on the 27th, but now it's right back as if to say, oh, folks, that was a mistake. I just missed my footing, but I really want to be there. And this says that if, for I don't care what the reason is, it might be the Dow, it might be just independently UTX, if it takes out 93.73, which was the high of the 26th,
that's what I'm watching.
then immediately you're looking at 94 round number as being the real target. If UTX can close above 94, the round number 94, which was hit 2 or 3 times as a high, that'll be very positive. That'll say now you've got open territory. Now that's open territory, but this is even more important. It's all-time highs for UTX, and the monthly chart is. So I think you're in a good position. It needs to hold what we discussed. And what I would say to you is just a part of your position can have a little bit of a tighter stop. But now we're looking at a situation. See, and this is what happens. I'm looking at many of the stocks that I've had in my opening call, and we took great profits in many of them, and yet they went higher. I'm looking at one that we had 40-something% gain, and we've just kept a core position, and today it's spiraled up. Earnings or whatever it is, to an even higher high. So the best stocks are still acting really well. So I suspect that UTX, if it can break 94, and since you have an April call, which closes out in 2 Fridays' time, right?
Yeah, it's the 20th.
It's 3 Friday. Of course, 3 Fridays' time.
Yeah.
So you got. It's ridiculous. You have so much time to believe that you can't make money here would be, it's impossible. We've seen impossible things before in the market. So all I can say to you is I think you're in the right position. And my point before was, wouldn't it be interesting if you could have just held the original, never got out, just stayed in, and you turn around one of these days and it's up. Each one's up $1.30 because UTX is now trading at 94.80. That's the way it should be, but it's a market is a funny thing. It can tease you a lot. So I think you're in the right position. I'm going to be watching this closely because it's a trade that I wanted to put on. I just didn't have the courage. Well, it wasn't so much courage. I didn't want us to be at risk at any point right now when I didn't know if we would break out today or not. Now we've broken out in that neck formation of my stalk leg pattern, which says, now we're getting to the point where, yes, you can go higher, but you've got to be more careful because when the turnaround comes, you go back to the body. That means that the Dow itself would go back to the body. It means that when UTX eventually turns, if it goes higher, it'll come back to the 93 to 92 area. So it's a little bit risky, but everything says the weekly chart is looking good. Oh, look at this weekly chart. Let me just open this up so you can see it. It's made a double cup formation. It's taken out the most important high of 87.50. Folks, we're looking at UTX, United Technologies, and it's trying to challenge the 91.83 high from way back in the week of the 8th of July of 2011. Theoretically, I should say to you, I see no reason why it just broke that. 91.83. Oh, yes, it broke the 91.83. Of course, it's trading at 93.32. So this is fresh territory. So money managers are going to drift to the stocks that are doing best. So I think you're in the right one. Let's see how it plays out. And you know what? You might be able to do this. It could be telling you, trade the options and keep taking your profits. And one of them you're going to miss because it either spirals higher, but as long as you keep a tight stop, you could just keep trading this.
Right.
And that doesn't happen in options very much.
Yeah, I've gotten 10 or 20 cents twice on it now.
Yeah, so I'm just going to say to you, that's another way to do it, because now what happens is you get a feel, and obviously there's going to be one that will miss, and that's the one that's going to say to you, wrong, the tide has changed, the trend has changed. Hey.
Do you think DuPont's got the same shot at getting back to its high?
Oh, DuPont, DuPont is in peak C in the weekly chart. My 120-minute chart in DuPont says it's gone A, B, C. It says it should tackle 49.40 or higher, because that would be leg D. But there's a big problem. The stochastic's only at 63%, and the MACD is good, But my biggest issue here, and I looked at it closely today because I wanted to go back into this, is that there's a rectangle formation forming. So this, you might have a little bit more, a tougher time in that the daily, let me just go back here, the daily of DuPont, DD is a symbol, went to that peak C. It looks like it should, with that falling axe formation, go above, but there's also a way of calling this an alternate count, that it might have been a peak F instead of a C at that doji high. It hasn't broken down, but I have to consider that's a possibility, because the MACD and stochastic are way different in DuPont to UTX. So be much more careful with DuPont, okay?
Okay, thank you.
Thank you. My pleasure. And that was Mark in Denver. We're looking at UTX, and we also discussed DuPont. Now, this is interesting. The Dow is now pulling back. It's down. It's up. It's up 91, down, 15 points or something from its high. S&P's down about 1.5 points. Now, this is the moment where you will find that there will be some kind of hesitancy. What will change completely, let me just go to this chart if you don't mind, right here. This is the 5 sectors that I look at. I call them the 5 quadrants that every day in my opening call we go through. This is the 120-minute chart, and it shows you that it's broken out, the Dow's broken out of the trend line resistance, but it's stuck on the line. And it says, yeah, it could pull back, maybe 14,646, maybe 14,640. That would be the short-term support. The minus 0.69 in the volatility index, which is sentiment, is telling you, I'm not showing any signs yet of strength. So be careful, because if that is the VIX index, goes under 14.80, it's 12.80. All of a sudden, you're going to have another bout of buying pressure. But now this is the issue here. When I'm looking at the different sectors, I didn't have a chance to do that. I'll do that now. I think it's very important to say that the spiral to the upside today must have caught a lot of people by surprise. I anticipated it only because we were taking it out of our DXD position yesterday, and the oval formation that I was looking at, the pattern that I called the stork leg formation, said, be careful. There's a good chance that we're going to spike until we're going to spike higher. Now, it's happened in a number of areas, and I'm just going to grab this chart just to show you in the den. This is the QQQ, the NDX 30-minute chart, which made a beautiful cup formation from the left side low bar. That wasn't the point of the vertical line that I draw, that plumb line, but that was an important point. The trough C that was made on the 1st at 4 o'clock at 27.84 has gone peak A, B, C, D to a left side, right side price time action, and says, wait a minute, that was a great move, but I need to retest 2815.75, the breakout high of the 1st of April, yesterday, and right now it's at 28.18. If it can hold above that and actually make a new recovery high, that's outstanding action. If it takes a little bit more time, 28.13 is going to be the level to watch closely. So I thought I'd just go through that, and then I'm going to talk. I had an email, a couple of emails, and I'll get to those emails when we get back in the final segment. Basil Chapman, Tiger Technicians Hour. Dow's up 92, S&P's up 9, and I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Traditions Hour. Now, let me just go through this quickly and then I'll get to the questions that I was asked. The gold, I just want to review. The gold is acting once again very weakly. The weekly chart is the 9-period exponential moving average resistance. It just cannot, it's only closed once above that. On the week of the 18th of January, and then again 23rd of November. Otherwise, it's going lower lows and lower highs. I just don't see anything in gold just yet. So that's very important. And the GLD, for those questions, the GLD, as I said before, same thing. And the pattern that I was looking at is I drew it ages ago. I drew that H that goes to an M pattern. There it is. And that's the pattern that we're looking at. So it's tough. I mean, gold it had a fantastic multi-year, decade something rally. You got to expect some kind of a consolidation phase of a year and a half or so. That was that. And I wanted to also just quickly show, look, the dollar, DXY, the dollar right there, the index is making that oval pattern and says there's a good chance that gold, the dollar, as gold pulls back, dollar should be much higher, but I still see the high-level consolidation with a good chance it's going to break above 83.30 to start another leg up, and that's going to be important. The major support right now is at 82.15 to 82. That's really a key area of support, but the weekly chart is still looking very, very good for the dollar. Now, one other thing is bonds. TLT, look, the TLT is holding very well. Something's going on. That's the Fed. The Fed is trying to keep those bonds higher. So I don't see a trade here unless it's real short term. It's just in a trading range. So the question I had was VLI. I think VLI. Whoops. VSI. VSI, yep, I agree. Question on when to buy, and I agree. This is, I haven't got it notated. I had it notated on black charts. ABC, D, recycle, ABC, D, E, F. So VCI is Vitamin Shop Inc. I just don't see anything yet, but it's on my list because it does have fabulous moves and strong pullbacks. So I suspect this is 48.27. I think I have to go to the weekly chart and talk about it more in the... If it breaks 44, then you've got to expect the low round about the 36 to 34 area will be the target. That's a long way down. So just have patience. I don't see anything yet. Maybe we'll look at it week by week, but right now it's trying to rally, but I suspect it's going to go lower. And the other question was AA. Yeah, AA is very intriguing to me. I haven't got anything on it yet, but it's starting to form a pattern that if it successfully forms that pattern, it's worth a nibble at 8.37. And if you have a portfolio, and this could be part of the portfolio, horrible looking chart, but I suspect that 830 level, it's at 837, Alcoa Inc., that's going to be the test. At 830, will it get there? Will it break it? How will it handle it in the dreaded H pattern? It's just on my list. I don't have a position in it right now. And and just we're about to wrap up. Let me just do this again for those of you who have just tuned in. I've decided that it was supposed to be a vacation. I decided I'm going to enjoy myself and also meet as many tigers as I can. In San Francisco, I'm going to be there next week on Wednesday night, the 10th of April, between 6 o'clock and 8 o'clock. I don't know how I was able to do it. I was able to squeeze out a room so that I could meet with you. Just chairs, me. I hope to have a projector, and we're going to go through a little presentation. I want to meet you guys. We'll talk. We'll discuss. The most important thing is I'm going to talk about the tide of the market, what you can use as benchmarks for the tide. That would be what moving averages, what can give you the big picture. And it's not sacrosanct. It's not that it's going to work perfectly, but it's that big picture that many of you would like to know about. So I'm really looking forward to go to the front page of TFNN, check it out. It's Basil Chapman 2-hour live webinar, San Francisco, April the 10th. You must sign up because I really need to know number of chairs to tell them, etc. So thank you for being here. I'll see you again later this afternoon when I speak to Tom, and otherwise I'll see you back tomorrow. Have a great day. Stay tuned for the Options Hour. Looking forward to it with Paul Gigante.